Alasdair, in an article that I read recently, it stated our over-indebted governments are increasingly losing trust in capital markets, economic productivity is slowing or even declining, and the temptation to run the central bank's electronic printing press to pay outstanding bills is growing, leading to much higher inflation in the future. Your thoughts on this, Alasdair?
I think the most important point to understand is that economies around the world are stalling. They're stalling for various reasons. We needn't go into that. But if you look at the recent information coming out of the United States on employment numbers, then we can confirm that this is beginning to be reflected in the statistics. Now, the problem that creates is that the tax base for, if you like, supporting the level of government debt is diminishing. Meanwhile, government deficits will be increasing because the consequence of a slowing or contracting economy is lower revenue on the one side and higher welfare costs on the other, which increases the deficit. So putting those two factors together, you can see that trust, if you like, in investing in Treasury debt, and it's not just Treasury debt. Other G7 countries have exactly the same problem. But trust in investing in longer-term debt is diminishing very substantially. And this is why there have been recommendations recently from various respected sources that governments should not bother about long-term funding and concentrate more on short-term funding. And indeed, this fits in with pressure, if you like, from the Fed to try and ease the requirements for big banks to hold capital, so that they can expand their debt into T-bills. So what you're doing is it does have an important effect, because if you're investing long term, then what you're tending to do is you're tending to take consumers' finances and putting them into savings in order to buy the debt. If, on the other hand, you're doing short-term T-bill financing, you're financing that by expanding credit, bank credit. So this is the equivalent, if you like, of printing money. It's not quite that, but very nearly that. It is getting the commercial banking network to print the credit for you. So this is actually, if they do go down this route, this is going to hasten the demise of the fiat currency system.